Hello and welcome to the special curtain raiser episode of the India Investment Marathon Mumbai 2020, a very unique landmark thought leadership event done by HSBC Global Asset Management India, and I'm in conversation with two stalwarts from there. First up we have Ravi Menon. He's the CEO of HSBC Global Asset Management India. Hi Ravi, thanks so much for coming here.
Thank you for having us.
And we have Tushar Pradhan. He's the CIO from HSBC Global Asset Management India. Hi Tushar, thanks for coming here. Ravi, first up, tell me and tell our viewers a little bit about what this thought leadership event is all about.
Yeah, well, we strongly believe that our position within this marketplace is fairly unique. As one of the few global players with a spectrum of financial services in the country, of which asset management is a key offering that we have. Within the world of HSBC, which is one of the world's most global organizations, the asset management business is also equally spread. And so we have our product and services being offered in pretty much every part of the world. How do you make that relevant to the Indian marketplace? I think the days when people said that India was decoupled and the Indian markets were decoupled from global forces, so to say, is no longer true, and everyone recognizes that. And I think this year gone by of 2019 was a classic case of what we've seen of the alignment which takes place when you've got global flows coming in with domestic flows and the resultant outcome. So the objective was to distill all of that in a half-a-day format to put that message across to our distribution partners. And how do we do it? That every year we come out with an outlook for the year, and so do we for 2020. What is the world looking like in terms of what is the global strategy? And do remember, this is just not piece of research. The people who are coming to speak are actual allocators of assets around the world. They are the people who are deciding what goes into developed markets, what's coming to emerging markets, within emerging markets, what's coming to India, what's going to some other emerging market. So if it's the second Friday of January, it's HSBC Asset Management Day with this particular marathon event that we propose.
Fantastic. So, Tushar, if I would ask you to maybe take a step back, or rather go back in time and see what you said the India Investment Marathon in 2019, how have things changed? Give me your outlook on how the year has changed for India.
Well, obviously 2019 was a year of hope. We were expecting that the economic cycle will actually start moving up. We were also expecting that corporate profits, which were under the weather for over 3 years, probably we thought that this was the year to actually take that turn. It happened in a way, but it was helped obviously with the tax laws and how the corporation tax levels actually came down. So we are starting to see a little bit of that, but the rest of the signs on the economy haven't really turned around. In fact, they've become a lot worse than they were at the start of the year. Whether it's the GDP, whether it's the IIP, any number that you look at, it's not really looking that hot. My outlook for the next year is that of uncertainty. But that is also going to be combined with a lot of hope, because the way we look at it is that compared to the rest of the world, where the uncertainty and the unpredictability of where markets are likely to go is even further and much higher, India looks to be a much better place than most of the other parts of the world. So one has to look at it from a relative perspective, because we tend to look at India from our own perspective and we try to beat it down a lot more. But if you look at the level of uncertainty really which is gripping the rest of the world, I think there is a lot of hope there. So my message really would be to look for these points of hope across the economy.
This is open to both of you. Is how are you in your position with HSBC Global Asset Management India preparing for this age of uncertainty? Ravi, if you want to take that.
So I think it's perfectly titled that this is going to be the year of uncertainty. And I would leave it to Tushar to perhaps highlight our view of that journey or that direction.
The way I look at it is when we talk about uncertainty, it is about the uncertainty of events. And in the last few years, what's been happening is that the certainty was very much there. So if you look at the central bank, for example, or if you take the Fed, everybody knew where the number was going to come in. So there was very little uncertainty about where the direction or even the number was. There were dot plots and everybody knew what was going to happen. If you look at most of the other events also across the world, they were pretty much in line with what everybody thought they were going to be. But last year, all of that has been thrown completely out of gear, and I think that is going to be more of the norm going forward. And that's what we define as uncertainty. But in my view, the uncertainty is really more like a market, because markets are uncertain by definition, right? So we are going back a little bit to normalcy, as opposed to earlier where everybody knew where the 10-year is likely to be, everybody knew where the liquidity was likely to be, everybody then just calculated where the stock markets are likely to be. But this time, at the start of the year, it's both the central bank here as well as the Federal Reserve in the US have given a signal that we will decide on the basis of the situation at that time. So it's that uncertainty that we talk about. Not necessarily bad for investors. In fact, uncertainty actually, someone who buys the uncertainty actually reaps the reward, right? If you are certain about your outcome, there is hardly any abnormal return to be made. So from a market's perspective, I don't think that's particularly bad, but from a political, from a social, from a environmental perspective, obviously uncertainty is bad, because we don't know what's likely to happen.
Ravi, one thing that's again come into uncertainty is India's growth. So I want to move towards looking at the larger picture of firstly the Indian economy. So yes, we have that 5 trillion GDP target, but unfortunately GDP numbers have not been racking up that well. How worrisome is this? What's your outlook for the way ahead for the Indian economy?
Events changing so rapidly that
Yes,
it's
yes.
difficult to really state what exactly is going to play out. But the fact is, and not just in India, but around the world, you've got almost a dual theme that events of uncertainty, but markets read as equity markets in particular, giving you certain indications which are very different from what the underlying theme is, and we are experiencing that in India. And there are well-known reasons that it selects stock and selects selection and quality being rewarded very handsomely. But perhaps one could state, and I am of that view myself, that the markets are perhaps discounting that future, that they are more optimistic of the outcome. And why is it more optimistic? Because some of the underlying issues may have been recognized, and there's necessary policy action which is being taken, be it fiscal or monetary, which is already there. And if one takes our own history going back to the 90s, usually it is the darkest hour which propels us to much greater heights and changes to be taking place. I think personally the reform agenda is very much back on the table. You're seeing very positive changes, including the disinvestments coming back. For instance, the corporate tax rate cut was totally unexpected.
Yes.
I don't think there was any commentary on with us or with the media or leading thinkers, but it came in. Why did it come in? Because it was something which was required at this particular stage, and it's done its good deed as far as the markets go. Certain other aspects have to come in. So I remain very optimistic that we will have a better year in terms of numbers, read as the GDP numbers. And again, I know what you lead to next in terms of the $5 trillion indication. The fact is it took us 60 years to get to the first trillion, well known, but I think worth repeating. 12 for the next and less than 5 for the third.
Right.
So we have that benefit, and with this particular outcome, we are still the 6th or 7th largest in the world.
Yes.
So little reason to believe that 12 months in our history is going to completely distort and change the direction of growth. So I'm definitely far more optimistic on what lies ahead.
Fantastic. Well, let's see what lies ahead. Tushar, the mutual fund industry is growing in India, but there is a large portion of people that says for the country, for the economy to grow, the mutual fund industry also has to grow. They need to go hand in hand. How are you seeing it grow ahead? What are some trends that you're seeing in the investments that both retail and large companies or organizations are putting into the mutual fund industry? How are you seeing trends develop?
India is a very large country, a large saving population. And I don't know whether a large majority of the saving population has shifted. Which means if I were to look at the potential for India, and if you take any penetration numbers in contention, whether it's the US and how many people there actually have penetrated into mutual fund investing, and compare it with a country like India, we are very, very far behind. So the potential for this business to grow is tremendous, because first of all, we are talking about people who have never invested before. We are not even talking about people changing, their investment pattern or strategy. It's about people who have never invested before. And to just get used to basic products like a liquid fund or maybe a fixed income product, and then eventually into a hybrid or maybe into an equity fund at some point of time. I think we still have a very long way to go. So I'm very optimistic that at some point of time, this will become mainstream, because first of all, people will get used to the idea that it's very convenient to do. Second is it's very tax efficient. And the third thing is that the yields clearly are, in your favor compared to everything else that is available to you. So I think it's a very logical outcome, but there's a lot of intermediation to be done, either through, distribution partners or through the media, and a lot of people have taken these initiatives already. So I think we have to wait for the benefits to come. And I think clearly there will be a different, set of investors that we look at in the future.
Tushar, when we talk about asset classes, how have you seen over the years India's thought process towards the asset classes change?
It's a very interesting question, because this is something we are trying to bring to the market here. As you know, as a US investor or investor in the developed markets, you clearly have a much better choice. You can practically invest in every region, every asset class, anything that you can think of, and it's fairly easy for you to buy that strategy. In India, first of all, people are not even aware of simpler strategies. Forget about multi-asset. But multi-asset is a very, very special place, and I think eventually every investor will eventually have a multi-asset portfolio. Whether we like it or not, eventually it will happen. But we have no idea how to manage the multi-asset portfolio, because each of the assets within that multi-asset portfolio come with its own volatilities and its own expected returns. You cannot mix the two. At the same time, you have to have a handle on your overall risk, because if you overweight any one asset something more than what your appetite can be, or whether the potential of the asset is never going to reach what your goals are, there's going to be a mismatch. So people will say, oh, I've invested across all the asset classes, but will it get you to your goal is another question which remains unanswered. So I think in a way what we are trying to do, and maybe this is one of the ways that we do it, is that we educate people in terms of what are the expected returns for each of the asset classes. And if you merge 2, 3 or 4 asset classes together, then what's your estimated return likely to be, and what's your volatility associated with it. And typically you will find that if you merge 3 or 4 asset classes together, you bring the volatility down, but you don't bring the return down so much. So that's an optimal way to invest. And I think that's really what we are talking about in this.
And that's why you need a good partner who can kind of guide you and also work to see the trends, which is what the aim of this is also. Ravi, coming back to you on the India Investment Marathon, like you said, this is the 3rd edition. How is the 3rd one being different from the 2nd or the 1st?
Well, we are fortunate that the markets are never the same, so
something's always different.
So every single day, every single year, there's something different. But I think it's also fair to say that that the objective this year is to reach this message across to as wide an audience. In the past, it's been very closed door. The idea is that the investors, your viewers, get a good sense of what exactly is the framework in which we operate in, and the kind of decisions that we take in terms of investing what is essentially their money. So there is a clarity that they will get. And this is an evolving world. Next year will be perhaps a different world, and there will be a different strategy. But at its core are the fundamental principles which we want to demonstrate to them.
Right. Tushar, when we talk about uncertainty and volatility, which is obviously very much prevalent, there are a lot of global impacts, effects, events that cause this. So for example, next year, January, we'll see Brexit. I think November is when the American elections happen again. So definitely will be an age of uncertainty. But how do you, in your position, kind of work towards these mega events to kind of advise your clients as well as get inputs from your global offices in those locations. How does that work? Could you just give me the insight on that? Give me the fly on the wall view.
Yeah, absolutely. Because having worked with a global organization for so long, you get to understand that there are so many currents which are flowing, and it really needs someone who can put all of this together to make any sense. And you're absolutely right that each of these events really shape investment returns.
Yeah.
So in a sense, when we talk about a Brexit or a change of guard or maybe more of the same by way of an election, one has to remember that certain asset classes are quite unaffected by it. So while we may imagine this to be an earth-shaking event and it changes, but if you're talking about the equity asset class, for example, I mean, they rely on the companies and their profitabilities. And as long as we're talking about the whole market, we're not talking about any one sector which gets affected because of this change or some sector which gets benefited from the change. As long as I'm exposed across the equity spectrum, I'm going to make the return of that equity asset class. However, there are much broader macro themes, like you mentioned, say interest rates, for example. Now, interest rates clearly have an impact on every asset class, whether it is valuation on fixed income or the valuation of the equity asset class because of a discounting factor, which is also linked to an interest rate. So I think those are more macro events which one has to grapple with. And eventually it leads to, in my opinion, a refresh in terms of returns expectation. So it is not something about the asset class itself that changes, but the returns expectation from each of these asset classes are clearly something that we need to redefine in the new age. So for example, just the local example of India, if you go back 15 years, 20 years, we had double-digit returns on fixed deposits, right? And it was really beyond our imagination to say, well, if you're getting so much return, then why go elsewhere?
Very true.
But as you can see, there's been a structural drop in these interest rates, and that has led to not the asset class changing, but the preference for people now relatively changing because of the returns possibility from each of them coming down. So I think that is what really makes the crux of the argument. And in our sense, what we are looking at is that the returns expectations have come down dramatically across all asset classes. And this began in 2018, by the way. But in 2019, it surprised us because the global returns across all asset classes have been extremely good, including equities. So if you take developed markets for last year, very high double-digit returns, close to 20%. Which is unheard of in a situation where we say we don't know what the next year is likely to be. So who knows? These things will continue to dog us, and we have no idea of actually making sense of where the investment returns are likely to be. But it's great to kind of keep track of what the global changes are so that we start to put a handle on the returns expectation of each of these asset classes. And that's why I think these conclaves are very important.
So are you guys going to tell me which asset class is the best for 2020, or will I have to wait till 10th Jan for that?
But I'd just like to add and partly answer what you're saying is to the point that it'll surprise people to read the US equity as an asset class, the kind of returns which it has made in 2019. And I suspect the number of us who invest into any of those asset classes have been very, very small. So the idea is clearly, and also from an HSBC perspective and our ability to manufacture a product around the world and introduce that in the Indian marketplace is a unique offering that we have. So without highlighting which specific class to go for, investing into a basket is really something which will hedge you. And perhaps to the large number of people who are increasingly investing into an asset class for diversification purposes or currency diversification, a domestic mutual fund which accesses those markets, which you can get those returns as well as liquidity within the very short period of time without opening an account overseas, etc., is so much easier. So I think hopefully we'll be able to bring this particular aspect of the asset class which is available and the ease of investing into it.
Okay, fantastic. Well, just as we wrap up, Tushar, usually I used to always ask people on panels or discussions is, what's your outlook for the next 5 years? But with things being so uncertain, I have changed my question. I move it down. I say, what is your outlook for the next 2 to 3 years for the mutual fund industry? What's your take?
Yeah, I think in terms of the expected returns out of India and the India asset class per se, I think clearly we are in a much better position than most of the markets. For example, if I were to say that if you were a German citizen, at best you would expect a negative return from the sovereign bond that the government would offer you. Compared to that, I think we are very, very better off in terms of at least positive returns and significantly positive returns. So that's one angle. The other angle is in terms of where we think the growth is likely to come in, which at the moment we don't see much. But as we know, all economics is a cycle.
Yes.
And I think maybe we are undergoing probably the last bottoming out of our cycle. Once the economic cycle starts to move up a little bit, I think there will be plenty of opportunities in a country like India, simply for the fact that we are not really there yet. There's a lot more to be built. There's a lot more to be really had in terms of even consumption growth. So I think there is really no warning that I can give you right now. I think that's probably as good a time to stay invested in our economy across the spectrum. And I think depending on the risk metrics in terms of what you are willing to take over a period of time, I think a 2 to 3 year will be clearly a hybrid strategy, because you don't want to bet everything on equities over a 2 to 3 year period. But at the moment, that's something that clearly looks very attractive from at least the mid and small cap perspective.
All right, fantastic, Tushar. Well, I look forward to hearing more from your presentation at the India Investment Marathon. Ravi, last word from you. What message do you want to leave with our viewers who will definitely be catching the highlights of this of the conclave later on?
Yeah, so we are very excited to be hosting the India Investment Marathon 2020. Provide our perspectives, enter into a more engaging dialogue to understand what investor concerns are and how those can be addressed, and hopefully all of you to invest with HSBC.
Fantastic. Well, thank you so much, Ravi, and thank you, Tushar, for coming in here and talking to me. Thank you for watching. You've been watching the special curtain raiser episode of the India Investment Marathon Mumbai 2020, brought to you by HSBC Global Asset Management India in partnership with ET Now. Well, the event is going to be happening very soon, and you can catch all the highlights right here on ET Now. So stay tuned to the channel. Thank you so much for watching.